Welcome everyone to another episode of Around the Block Talk. Today we have with us Mr. Tobias Bauer. He is an emerging tech VC and currently the principal at Blockchain Founders Fund. It's very good to have you here today with us, Tobias, and looking forward to what you have to share with us.
Absolutely. Thank you so much for having me on today's show. I'm very excited. I've seen the other videos before on YouTube, so that's awesome content. Hope I can live up to that standard, but I'm trying my best. Yeah, happy to give a quick introduction about myself and then what we are doing, and then we can dive into a bit more, sort of the details, what a day-to-day looks like and what we're looking for. So I'm originally from Germany, from Munich, so the southern, more mountain-like part of Germany, and moved to Asia though quite early. So I've been living around China, Singapore, Thailand, and Tokyo now for the last almost 8 years now. And I started off my career more typical in the private equity investment banking space. So we did a lot of early stage deals across the buy side and the sell side. So we sold, the mid-sized companies to buyers from outside and inside Europe. And then after I was moving to the Middle East, where I worked with a company called Mondia. We rolled out their payment space across really emerging markets. Right, we're talking about Egypt at that time. That was in 2015, right? So that was a longer time ago. But it was a really interesting area to see how technology can essentially improve lives, right? Or make daily transaction a lot more easy and accessible. And after this, I moved to China, where I worked at a edtech company, educational tech company. So we basically gamified knowledge into bits and pieces and made it very easy for anyone essentially to learn big chunk of knowledge. So we found our product market fit in the B2B side, right? When we worked with like larger corporations such as Mandarin Oriental or Porsche, where there's typically, if you onboard a new employee, for example, in Mandarin Oriental, they need to know everything about the menu, right? They need to know everything about the hotel to really support their guests as best as possible. And we sort of made that knowledge more accessible, right? Instead of having a 6-hour, presentation, essentially what you need to learn over the next 2 years or like 2 months to like really get properly onboarded, they were using our application and did it, 10 minutes a day, but it was a lot more effective because people actually remembered because it wasn't a gamified way. That worked well. We raised 2 rounds of capital. We went through an accelerator as well. We found traction. The company's still around, still profitable. But then I went into the venture capital side because I really liked the investment space, but still wanted to be an operator. So I always was looking at early stage investments and tried to be with accelerators or at least more hands-on venture capital funds. Right? I was not super interested on only the pure investment side. I wanted to build as much as possible. So I worked with SOSV for a while, which is $1 billion fund, but more on the accelerator level, right? We worked out of the China accelerator office out of Shanghai. We did a lot of investments across India, Southeast Asia, and helped them sort of bridge into the China market at the beginning and open up, because obviously everybody knows it's a massive market, right? It was not so much on the blockchain side. It was purely Web2 most of the time. We did a couple of selected deals using blockchain technology or in the Web3 as the buzzwords are falling. And in China and Shanghai, I met my 2 partners, and then we basically decided to work together right after, and we're building Blockchain Founders Fund over the last 3 years. At Blockchain Founders Fund, we are, again, very early stage focused, right? So we look at deals in the pre-seed and seed stage. That's literally right after they've been incorporated, right? There's typically not much revenue at that stage yet. It's pre-product mostly, it's pre-revenue to an extent. And we're really looking to find great builders and founders who want to solve a big problem in the market with their solution. That's been working well. We have now done over 100 investments in the last 3.5 years. And we raised 2 funds. We had a smaller fund first, which did a very good return. And then we now raised 75 million fund since December, where we deployed roughly about $9 million into about 35 companies as of today. So it's very early checks, right? Because the round sizes are typically small. And then we like to reserve a big chunk of our capital for doing follow-on investments. And we wanted to have our companies essentially well capitalized. Right? And as of now, the market looks challenging, but not just in crypto, also on the equity side. So it's good that companies have a long runway and are essentially, have enough dry powder to really build the product and go live once the market recovers and people are, not as scared essentially to look for different solutions. So that's kind of what we're focusing on. I mean, I can talk a lot about different angles. Maybe we can finalize a focus point where I can jump in and sort of share more details, because it is quite broad what we're looking at. But obviously there's a lot of challenges, a lot of benefits being in that space. I'm happy to share what is most interesting for the community. I think you're on mute.
Yeah, I'm sorry. So one point that you mentioned, that the market today is kind of challenging. So particularly crypto, blockchain, yes, and also the overall market. So what does that mean for an investment firm, and how does that change your strategy for finding out these new investments?
Yeah, of course, there are a lot of different investment firms, right? So we're talking about venture capital, which is more illiquid assets typically, right? Where you typically invest in the equity side of businesses, which is a longer investment cycle because it takes up to 3, 5, 6 years to get this position liquidated by either selling the company to a different company or going public, the typical ways. In crypto Web3, it opens another bucket of assets, which is all the tokens people invest in, or even NFTs, right? So that kind of ownership feature. That gives a new liquidity aspect to an equity-focused fund. Of course, it's not just venture capital funds investing in the space, right? There's a lot of hedge funds who have different trading strategies for these cryptocurrencies. There's private equity funds in the space. There's asset managers in general. So there's a very diverse investor base, all looking into the Web3 space, and of course beyond as well. So they all get affected differently, right? If you're purely focusing on tokens, then you're probably going to have a harder time right now because the whole market is just tanking. Right? That means that your assets are also going down rapidly, as that's kind of like what the market has been showing us. On the equity side, it's a little bit different because you won't have that immediate downside, right? Some of the growth equity stage, later stage companies, they are already facing down rounds, right? BlockFi raised at a 5 billion valuation, which is a predominant company in the blockchain space, and they recently closed a new round at 1 billion, right? So that is a big markdown on the value side, and of course it will affect investors because some of the investors have invested at a 5 billion. Now they obviously lost a big chunk of their return. So that's going to happen moving forward, most likely in several other industries, not just in the crypto space, also in the fintech side and e-commerce and all these things, because multiples have changed, right? People are now more aggressively looking at profitability, product, and not so much on hype investment. Essentially, it was. So fundamental analysis becomes a lot more relevant in those markets. For us specifically, not too much has changed, to be honest. Why? First of all, because we are early stage anyway, right? So our companies cannot really do a down round. If they do a down round, they most likely go bankrupt, right? And most of them have raised quite recently, right before that market sort of shifted, which then gives them a bit of runway, right? So we hope that they all at least have a runway of 1 to 2 years, which then most likely, of course, we never know how long this market continues, but gives them a bit of a head start of now focusing on building and then going live once the market recovers. Of course, we had a little bit of token exposure on this fund. It was very, very tiny, but that obviously went a little bit down. But some of the tokens are, for example, not fully unlocked yet, right? There's always a lockup period when you invest in tokens until you actually have them in your hands. So they're anyway valued at 0 or at cost in our portfolio. So nothing much changed here. But being an early stage investor, you're right now at a pretty good spot because you can pick up companies, good companies, right? Because all the noise gets a little bit pushed out of the market. People who are here for the money are probably not longer here for the money because it becomes very challenging. So that the actual builders and people who are really committed to the space and believe in that industry are now surviving or essentially still doing what they're doing. And for us as an investor, that makes it a lot easier to source those companies. On the other side, companies we've been talking to about, let's say 6 weeks ago when they were raising at a 40 million valuation are now coming back and saying, oh, maybe, we should target a 20 million valuation, right? So valuations are normalizing, which is good for an early stage investor because we want to come in as early as possible to get that exposure. And we've seen this in the last bear market in 2018-19, where we picked up the best companies we now have in a portfolio, and they became unicorns through the last bull market, and are still progressing quite well. So for us, that's a great time. But you need to have dry powder, right? So if all your capital is deployed, you're probably in a little bit more challenging stage right now, as we have said about 60 million to deploy over the next 2.5, 3 years. We think that we're in a relatively good spot to still have capital available when we invest in those early stage companies in the next couple of months. Of course, we are not really doing any token investments right now, right? We are more or less fully staying away from it unless, maybe one of our current companies where we already hold an equity stake in is going through a token raise. But then most of them, to be honest, they have anyway delayed the process slightly, right? To see how the market evolves and then start going back and raise something on the token side. That being said, on the equity side, we're still very keen to deploy. Like I said, we're looking for really early companies. We're focusing a lot on the founders, because that's essentially, it's actually a very interesting point I want to mention it quickly. We get a lot of applications every single day of founders wanted to pitch us their idea, and that's fantastic. But a lot of them asking us to sign an NDA, right? And I always say, it's not the idea which is going to make your company great, right? It's always the execution, because typically, and just to give you an idea on the numbers, we are looking about 500 companies per month right now, right? And I think that's going to be picking up as we just added like 2 more team members. So there's a good chance we're going to hit like 700 companies in the next like couple of months, right? So like most of the time, I've seen the idea before, right? And about 80% of the time, I've seen the idea. I've seen this in maybe not the exact same idea, but like in a very similar stage, I've seen it. But it's always the execution and the founders and like the way of they going to market. So yeah, it's really, that's a very, very important point. And that's also how it reflects to our due diligence process, right? There's essentially 3 areas we look at. First one is founders. We want to see that the founders are very dedicated to the project, right? So they need to be full-time. If they have part-time associations with other firms or other projects, then we would ask them to quit and focus fully on that project. Then we also want to see founders who have a deep domain expertise in what they're doing, right? If they're building a DeFi solution, like a decentralized finance solution, then it would be very helpful if they have been previously working either in traditional finance, as we call it, or in banks, or maybe at a different DeFi company, and really understand the space and have the connections, right? Because it's hard if you want to pivot into a new industry because you don't know anyone, you don't have previous built connections. It's even going to be a difficult sales cycle unless you bring someone in who sort of solves that gap. Then, as we are purely focused on blockchain and Web3, there's a big part that we want to have at least someone on the team who is more like crypto native, right? Who understands how smart contracts are being developed, who has the connections within the crypto industry, who understands. Because to be frank, not every company in the world needs to be a Web3 company, right? And not every company in the world needs to launch a token at some point in time. Sometimes it might be even disadvantaged, right? Because it adds another layer of complexity to it. It might be even a harder sell, especially if you sell to institutions who are a bit more conservative. And of course, you limit your user base, right? There's a very few people who have a wallet. There's very few people who understand crypto. And sometimes you might not be able to tap into that network. Maybe it would make more sense to just keep it, non-crypto, right? Or pure blockchain, sort of just use the technology to solve sort of a challenge within your industry. So a lot of times you also go back to founders and be like, hey, it's a great idea what you guys are doing, but I wouldn't necessarily do it as a blockchain or a crypto company. Then it might not necessarily fall in our space, but we're happy to connect them to other more or sort of non-Web3 investors who might be more interested in that solution. So that's a lot of things about the founders. The second thing we look at is market size, right? And market size, that's I think what a lot of founders underestimate when they go through funds, especially if they go to bigger funds, because a fund has fund economics, right? So we need to return the fund, and of course more than this, because we also want to make a return for investors. Right? If they invest in a risky business, which essentially venture capital is, they require or demand a higher return on the invested capital. So by, sometimes we hear from founders, just put in 100K check-in, right? But like that's not necessarily making a lot of sense for us, because if I put in 100K check at 100 million valuation, I own basically nothing of that company, right? Even if that company reaches $1 billion from a valuation perspective, I 10x my capital, which then brings me to $1 million, right? That's and a $75 million fund not going to have a significant impact on the return, right? It might be interesting if I see a lot of synergies and I can plug it into other portfolio companies to help them gain, traction or profitability. But from a pure investment perspective, that's not necessarily very helpful to make this fund a success, right? Even though I would maybe love to invest at that high valuation, but just it doesn't make sense. And that problem even becomes more important if the fund size increases, right? At a 75 million, it's easier to make a return at least 1 to 3x. But if you have $1 billion fund, right, you cannot deploy anything less than maybe 10 million, right? Because otherwise it would never make a significant return on the fund. So coming back to the market size, and what that means is if that company is targeting $1 billion market and the market only, has about 20% more room, the company might not even be able to grow in that same ratio as our investment needs to grow in order to make that company a success, right? So that's why as a founder, I think it's very important to show a larger market size, but on a rational basis, not just like anywhere numbers, with the vision in mind that the product might change over time and you might be able to tap into different markets, which naturally expands your market size. And give that investor the confidence that you have what it takes and the market is large enough in order for them to make a significant return. The third thing we look at is, which is very, very important for me, is the product side, right? I've been an operator myself. I like to have something in my hands, right? Or at least play around with something. So and Web3, to be honest, was driven a lot by this when people invested in communities, right? They invested in revenue generated by NFT drops or other sort of incentives for the community. But the product in itself has not yet launched, will not be launched anytime soon, or has not even been started, right? And that's where I see a big challenge, because keeping the community happy over a very long cycle, which I call development cycle, is a very different adventure. And we've seen most of the companies are doing well right now, or still doing well. They have a product, they have users, and they're really focused on building a great product, right? So these are essentially the three things which are extremely important for us and for our investment thesis. And and that's kind of like what we're focusing moving forward.
Right, indeed. So I believe, as you mentioned, the positive for you is that the kind of the noise kind of filters out, so you have only the people who are in it for the longer term. And on the flip side, you need to support your investment for a longer time in such a kind of market. And right, indeed, you also told us the different criteria that are essential to pick the right investment. So coming to that on the product end. So in my opinion, a lot of these blockchain firms and blockchain founders, they are failing to develop the right products. I think they start from a technology end, but probably they're not able to define their product properly. And this is something entirely new landscape. So what are your views on that? And what kind of issues do you see at the product end in these companies?
Well, it's a very, very important comment you're making here, right? And I very much agree with you. Of course, there are companies who are developing great products, but there's a lot of people who develop the same product slightly better, right? And that never happened in innovation, right? I mean, for a customer to switch and take on a new product, essentially, it needs to be significantly better, right? And the problem is right now, at least in the Web3 space, is that most of the adoption is driven by the early adopters, right? If you look at the product lifecycle, of the early adopters, right, and then it continues to go on until the mass comes in, and then it stagnates and it goes down. So essentially, in a product lifecycle, right now, the early adopters are the ones who care about the technology, right? They are interested in reading up what is an NFT, like what is that white paper doing, like what is the utility of that token. But I'm convinced that down the road, when more and more people join the market, that will not be the case anymore for the majority of the people. I don't think that anyone who will want to use a crypto project wants to read a 20-page white paper and wants to understand that what they're buying right now is an NFT, which like gives them ownership because of XYZ, right? I don't think that that's the case, because right now, if you open your internet, you don't need to know how the internet works, and you can still buy a chair online, right? And it's very easy. The same principle. But in the very beginning, in the early days of the internet, it was the same thing. People invested because of the internet and because it was such an interesting technology in itself, right? But that obviously changed over time as it reached mass adoption. Now, in the crypto space right now, a lot of people building the same products all over again and just making small changes, and then they lack product market fit because there's not enough user base to have like 1,000 different products for everything, right? There's only like, a couple million people actively using crypto products. And that's even get smaller if you go into DeFi or like NFT and metaverses, right? There's even a smaller user base. And especially also in the B2B side and more the corporate side of things, institutionals, when you sell to them, they have challenges adopting technology because of regulatory uncertainty, right? Because of, it's a different technology, it's always more risk, especially if you're publicly listed, you have probably more challenges justifying any sort of involvement in that space with your board, with your shareholders. You have a external branding image, which might get under scrutiny. So there's a lot of different challenges still. And also what I see a lot of, basically all the time happening, is that we see more and more decentralized applications being built, right? But the infrastructure in itself is still very rusty. Right? There's a lot of gaps. It's not very user-friendly. The UI UX is lagging. There's very few aggregators. If you have assets across different chains, wallets, it's very difficult to see an aggregated picture. But we have 1,000 different games, right? And we have 1,000 different metaverses which are being built for all sorts of, different verticals, product niches. But no one thinks, how do we get people in that metaverse, right? Or very few people do. No one is always a bit exaggerated, but very few people think, how do we get people in that metaverse? What needs to happen that my mom, my grandma, my aunt, whoever, right, can sign up and play around in the metaverse and buy land? And it's not by using, in my opinion, a MetaMask and like 50 different decentralized wallets where you have to remember a 15-point or seed phrase, things like this, right? So that's probably not the way to mass adoption. You need to figure out a better way, an easier way, a more sustainable way. And that's why I would love to see a lot more development happening to make it easier for developers to build better solutions, right? And then, of course, more stuff related to infrastructure, more stuff related to security, to build the fundamentals for other people to build decentralized applications on top, right? And I think that's kind of like what we are looking at the moment quite intensely, is like, how do we find these projects to improve that infrastructure to make everything else more accessible?
Right, indeed. So as you mentioned, the products in Web3 need to be educating their user, need to be the UI UX needs to be very transparent for the onboarding of new users. And so also, I believe most of the investments that someone would make in the Web3 space, the mass adoption is still a few years away. So you will only get early adopters. And so the growth trajectory, it's a little delayed to a very time for mass adoption. So what are your views on that, and how do you mitigate for that?
I have a good friend who said an amazing sentence on a panel I was last week, right? Because I do agree with you that mass adoption is not there yet, right? But what also a lot of people underestimating is how fast mass adoption can be achieved with the right product. So he basically said this. There was Tony from Neo Global Capital. I have to do some advertising here. He's a really amazing guy. But he basically said, you probably all know WeChat, right? I think it's a good example. 1 billion people are on WeChat, right? And do all sorts of things with it, like what we call a super app. We are only one WeChat away from mass adoption, right? If
Indeed.
someone builds a WeChat for Web3, right, which makes it super easy, accessible, people download it, and 1 billion people get on WeChat, we have mass adoption, right? So it can go really, really fast. We just need to find the right WeChat and the right people who can build the right WeChat for that specific space. But I don't know when we're gonna have that. I don't know who is gonna build it, of course. But it can go very fast if you have the right product and if you position it in the correct way. As of now, yes, we haven't achieved mass adoption yet. I do think that we will achieve mass adoption in some point in the future, because blockchain essentially solves a very important point, and the whole, and it's not a very old technology, right? It's a couple of years old, and a lot of people are building and are excited about the space. Of course, now with the market, a lot of people will basically leave the blockchain space again, because unfortunately they lost some of the savings, or they have been affected by it in a negative way, and that will bring us a bit away from mass adoption. But what is more important, and that's how I like to measure mass adoption, is how many institutionals are also coming in, right? And still, despite that, look at Disney, look at banks, right? Look at large entertainment companies. They're all exploring the industry, right? Be it buying land in a metaverse, or be it by launching their own NFTs, or any other sort of way where they get exposure. And we see this in our fund as well, right? We have now 145 corporate partnerships, which probably all larger tech players from Google, Amazon, ClickUp, they're all interested in working with Web3 companies. And we also created, which is kind of interesting, maybe, the Global Expert Network, right, which is about 330 people we have a very good relationship with, which we built over the last 3.5 years. And they come from all sorts of backgrounds, right? From IBM, from Jacobs, right? From a lot of different companies. And they join our network because they would like to get connected in industry. They would like to see what the developments are, what kind of companies we invested in. And a few of them become advisory members of our companies. They join as mentors, right? They connect with our companies and having conversations of how this can be used or utilized for their own business in order to connect fans, give users a better user experience, in order to facilitate payment, make financial services more frictionless. So there's all this adoption. It's just early, right? But I do think with that appetite and that amount of money been flowing in, and large crypto funds being raised, A16Z just announced a multi-billion-dollar venture capital fund for crypto, right? Despite the market going down. So there is enough adoption. We just need to bring it over that little peak, right? To make it a lot more easy to use it. And we want to be a part of that transformation journey, essentially, by investing our capital intelligently in products which can solve these gaps, right? Or in founders who can solve these gaps. And I think that's the way moving forward. And everybody should try it out, play it around, get an idea, obviously at a very risk-averse basis, especially right now. But I think it's a very interesting angle to explore, and probably worth spending a couple of hours understanding what's actually happening.
Right, indeed. So, coming to the kind of startups there are in the blockchain. So I can see two major categories. So either enterprise blockchain, B2B solution, or public blockchain and consumer products. So I from what I can see, there's more adoption in the enterprise end, and a lot of these institutions are uh, exploring how to use blockchain. So what kind of startups are you looking to invest in at this point? Is it more at the consumer end or the enterprise end?
Yeah, I like it. I like your classification, by the way. I think that's a quite interesting view. We actually have a similar view, right? So at high level, before I go into details, we look at three different areas, right? The first area is what you mentioned, it's blockchain, but non-crypto, right? That's essentially the enterprise side, B2B, right? Typically, it's blockchain is just at the core solving a technology, it's solving a problem, right? The core tech. So for example, we invest in a company called TripTax here in Singapore. I don't know if you've ever filed tourist tax refunds, but it's a very manual process, right? They're basically putting on a blockchain. It's offline possible. You can do a tourist tax refund in less than 2 minutes, right? Fantastic solution. It's a difficult sell because obviously, B2B governments licensing, but they're doing a white label solution now, which is quite exciting, where they get a tremendous traction right now. Right. So that has nothing to do with crypto, right? Despite the crypto market going down, they're just using blockchain to solve that problem. And blockchain is the right instrument for doing this. A similar company is BeatDAP, right, which is essentially an auditing firm for music streaming services, right? It's a $3.5 billion gap between reported plays and actual plays of Spotify, Apple Music, and essentially artists. And they're able to solve the problem by putting it on a blockchain and audit every single stream. And they already track 100 million monthly active users, right? But they have no exposure to crypto. The second bucket we look at from a fund perspective is everything which supplies the crypto industry, right? And that's not necessarily the pure infrastructure play. If you think about like the layers, right, and all these things, the polygons of the world, we're looking at more from what do we need? My whole point of like in a previous question, right? What do we need in order to make that accessible, right? So we look at exchanges, custodians, white label credit cards, debit cards, like these things which are necessary from an infrastructure perspective to supply all the above lying crypto companies. But also these companies not necessarily have an actual exposure to crypto because most of them won't launch a coin, right? Or won't launch a token. The third bucket, which is still the biggest one, is about 50 to 55%, is essentially crypto native, right? That's where we look at gaming, GameFi, which was a big part. We did our first investment in gaming in 2018 in a company called Splinterlands, which is now one of the largest gaming companies in the world with still 150,000 daily active users, which is massive for a company in the blockchain space. And then we did a lot of stuff on our NFT and utility for NFTs, right? Because the problem is you're buying an NFT now, which is basically a JPEG. What are you going to do with it, right? Of course, yeah, it might appreciate in value, so it's an investment, but can you actually do something with it, right? Could you like use it as a collateral when buying a loan, or could you go and like get rental fees when you rent it to someone who really wants to have that NFT to solve a certain problem, right? These are things we're looking at. DeFi, of course, is a very important factor, both institutional and individuals. Individuals mostly been lending, staking, the Celsius of the world, which are now not doing that well. But also on the B2B side, where they're working with a lot of hedge funds, banks, in order to make those whole infrastructure smoother. And then there's this whole question about metaverse, right? Metaverse is a part of that crypto native bucket, but I am very unsure how this will play out, to be honest, right? I'm not ready yet to invest in a lot of different metaverses because there might be three different outcomes, right? The first outcome is that basically we're going to have 1,000 metaverses live by end of the year. 98 or 99 or 98% of them are going to fail, and 3 of them are going to survive, right? And everybody's going to using those metaverses. The second outcome is no one is going to use metaverses for a long time because it's not immersive enough. The hardware is not ready. And people don't want to spend their Saturday afternoon listening to a Justin Bieber concert in the metaverse, right? That's probably the most unlikely one, but I think it is important to have in mind that in order to make a metaverse really immersive, hardware is a really important factor, right? Because right now, to be honest, most of the metaverses are boring. Maybe not from a financial perspective, because you can still buy land and it appreciates, but it's still not immersive enough, right? It's still not interesting enough that you would spend your Saturday night walking around in a metaverse and talking to your friends. Now in COVID, that's a different story, but like things obviously also changed. And the third outcome would be, are we going to have like 100 metaverses, but every metaverse focuses on something very, very niche, right? So for example, if I want to be Burning Man psychedelic free, right, then I would probably go to a metaverse called RDland, right? One of our portfolio companies, where we think that's probably an interesting niche where people like. If I want to do an educational metaverse, then there might be another player, right? And so on and so forth, that you have like very, very niche companies. But as we've seen in Web 2, most of the time you have a lot of players, then the industry consolidates and a couple of small players are emerging, right? The question is now with Web 3, where we have more creator economy, potentially DAOs down the road, like decentralized autonomous organization, where like it's more governed by the community rather than by single institutions. If that picture will change or not, I don't know, but like that's definitely something we're looking at and are tracking it, but we haven't done a lot of investments in that space yet. But sort of that's high level what we look at. Of course, there are different sub-theses for all of them. Security is a big part, right, across all three. But yeah, high level, that's kind of like what we look at down the road with this specific fund.
Right, indeed. So as you categorize the metaverse, I'm of the opinion that the third option that you mentioned, I think that is a likely one from what I can see evolving.
Definitely. I mean, I'm excited to see how it plays out. But it is an interesting angle, right? That, you know, metaverse will be theme specific essentially, right? And not generalist metaverse, which will remain. We'll see. It's exciting times.
Indeed. So at our firm Ideas, we are also building a metaverse. And so that is an educational metaverse, and we're building a university in a metaverse. And that is
awesome.
The project, right? That is a project with the Indian government. And we are currently laying out the infrastructure of blockchains in the institutes of the country. And that is aimed to be the largest educational blockchain in the world. And top of that, we plan to build this metaverse of a university.
Yeah, I think that's like the educational side and the metaverse side is probably one of the main drivers for mass adoption, right? Because first of all, we already see universities getting into the blockchain space, right? NUS in Singapore, National University of Singapore, SMU, I think INSEAD as well, a bunch of US American universities, they're already putting their degrees on a blockchain, right? So that there's no fraud anymore. Then gaming in education plays a major role, especially in the emerging market. But would be awesome if we can incentivize, right, everybody to learn using a gamified solution. We invested in a company called Grid. They're basically doing a no-code platform for games, right, where you can connect any NFT in the world and create a game in 5 minutes. They already built 6,000 games in beta mode. But it's a very interesting angle because they found a lot of early traction in the educational side, right? So like people like you and me, anyone can build games, right? You have a Web3 layer on top, you get incentivized to do that, and you get incentivized to play them. And you can connect NFTs, which gives you TSA utility, right? I love the idea of like having educational metaverse, right? Where you can build universities in, because it essentially makes education more immersive and more fun. And right now, a lot of education systems around the world are the opposite, right? Where it's not working, it's outdated, it's not fun, it's purely learning by heart. It's, you know, it hasn't reached that standard where we are right now, because essentially right now, knowledge is a commodity. Right, I don't need to learn dates by heart anymore because I'm faster and more correct. It's just looking at my phone than you telling me them by heart. So like that brings a whole different dynamic towards learning and education, which I think is very, very exciting. So yeah, I'd love to learn more about your project down the line.
Sure, indeed, and that is the kind of things that we're looking to enable, make it more immersive, make it more accessible. And those are the kind of things we're trying to work on. So in general, in the last year, we saw very heavy investments in the Web3 in the Web3 world. And I believe a lot of major investment firms, they announce special funds just to invest in these Web3 and blockchain startups. So what is your view of the industry today, and how do you see the entire industry, this Web3 industry, evolving in the future?
I mean, we're a big believer in the industry, right? Because we've seen it solving a lot of challenges. Of course, you have a lot of scammers in the industry, unfortunately, right? Which is a problem. And I really hope that regulations and governments pick up and bring more clarity into that space. So right now, it's still a wild, wild west to a bigger part. But I hope that the crash of UST and Luna and Celsius and all these things brings more attention. I don't think at all that banning is the right way of doing it, right? Some other countries like China banned it, because banning has never really worked. There's then always a black market, or like people using it anyway, just in a different manner. I think we need to give crypto and blockchain the right attention it deserves, because it reached the stage where it can never be neglected, right? It's still $1 trillion in crypto, right? Of course, maybe not 3.5 anymore like it used to, but that's going to pick up down the road. So I think we need a lot more talent in the space, right? So people, developers especially, like we need amazing developers in that space who understand it, or at least solutions which makes it easier for developers to build such products. We need to have a better regulatory system from governments, more attention from governments to make sure that those who are interested in building legitimate businesses get the support they need, and not unnecessary milestones put in their way and hurdles put in their way. And I think we need a lot more investors coming in who make more selective bets on the industry, right? Because right now, still the majority of capital is flowing into very few companies, but they raising billions of dollars, right, in across multiple rounds. And a lot of early stage companies, especially in markets where it might not be most favorable to invest, they left dry, right? I'm talking about Africa, right, which is an amazing market for crypto adoption. I'm talking about Southeast Asia, India as well, right? I mean, I'm going to India very soon, in about 2 weeks from now. We have done 2 investments in India already. We're quite excited about that market. I see Sequoia raised a new fund to also double down on India. So we need to spread the capital more, right? And incentivize people across the world to get access. And that's kind of like how I see the industry. I see mass adoption coming slowly but surely. I see that we are able to solve a lot of challenges with crypto, Web3, blockchain, and we need to solve it. And I also feel like that we can give a lot of people access to financial services through that technology. And that's kind of what we need, right? I mean, there's a lot of unbanked people in the world. There's a lot of credit challenges. And I think that's where the space can really make a difference. And it probably also shifts the world back to incentivizing and supporting creators and users rather than single companies benefiting from the data being created in our current economy.
Right, indeed, and as you very rightly mentioned, there's a lot of scope for emerging markets in this ecosystem. So, as one of the biggest promises for Web3 would be the decentralization aspect of it, breaking monopolies and kind of distributing the power and the value across the chain. So what are your further views on what does this mean for emerging markets? As you mentioned, Africa, Asia, what does it mean for the general population in these markets? What they can do with it?
No, I mean, it's a bit like I mentioned, it's really going to give access to everyone, right? Because right now, essentially, one institution is going to decide if you're credit worthy or not, and it's going to give you a loan or not. Of course, there are certain other areas in the Web2 space, such as like smaller lending, microfinancing, all these things, which are solving it to an extent, but it's still buried in paperwork, very difficult to, apply for that, and not a lot of people get it, right? And we still look at, I just came back from the Philippines, there's about 78% of the population is unbanked, right? Which is massive. And that's not just in the Philippines, this is probably in Indonesia, very similar number. I don't know the number of my head, but same as probably in Africa, South America. There's so many countries right now where this can really help, especially as these countries have challenges on the payment side. Currencies is devaluating, right? You have international remittance where people sending out money, which costs them a lot of funds essentially, right? I mean, in Singapore, we have a lot of foreign workers here. They send money back to their countries, and it's essentially a very, very tedious process with high fees, right? And like, middlemen take a big cut. I think if this whole thing it becomes decentralized, first of all, the middleman will be removed, which then leaves a higher margin essentially for everyone else who deserves it essentially, and also gives people access to this, right? And it makes it easier for people not depending on a single entity, but the community can essentially drive value throughout throughout the space, and provides access not just financially, but also access to information and access to communities.
Right, indeed. So also in terms of the geographical location, what are your future plans for investment? Do you see better opportunities in the developed world, or do you see better opportunities in the emerging markets for investments?
So, I mean, if you look at right now, the majority of our deals in that space is still coming from the US and Southeast Asia and Singapore, right? But emerging markets such as Vietnam, Philippines, Africa is picking up, right? They just didn't get or don't get the attention right now they deserve. So I see that moving forward, when we have more talent in that market, when and Southeast Asia is kind of an exception because a lot of funds looking into these markets because there's just such a big population. But the same thing will happen with Africa. The same thing is already happening with LATAM to an extent. So that is exactly what we need, right? So we as a fund, we love emerging markets. We still need them to be incorporated in like more secure places such as Singapore, but if they operate in other areas of the world, that's completely fine, right? We love that because the crypto adoption is high, the user interface is high, and people actually have a reason to switch to something because the tedious process is just very difficult. So we love emerging markets. We're definitely going to allocate a big chunk to that from the fund. But of course, it's not going to be an emerging market fund, as US, Europe, and Singapore, sort of as the hub. Middle East is picking up a little bit, driven by Dubai, as there's a lot of capital in that market, is still a very, very important driver for value, right? Especially since a lot of talent is there, funding is there, valuations are higher, right? It's a different dynamic for a fund. But I lived 7 or 8 months in Cambodia, right? I lived in Thailand. I lived across many emerging markets. So I really try to understand where we are, what is needed, and what industry players do we connect with. So yeah, for us, it's a very important part of the investment strategy.
Right, indeed. So also, Tobias, we have students who will be in the audience and who watch our channel. So what advice would you have for students to carve out a career in this Web3 space, and what they can do?
So I think try out as much as possible. That's what I did, right? Really see this as a learning journey. And I don't think anyone wakes up and be like, oh, I need to be a blockchain investor now, right? I don't think that this is happening. And it's good that it's not happening, because all the previous experience from finance, Web2, being an operator down to investment is kind of like now what helps me investing in those companies, right? So if you're a student out there and if you're interested in the area, like do your research, right? Maybe intern at some of the companies and really understand if that's something you like to spend a majority of your time on. But ideally, you want to make sure that explore enough. You join different areas of the field, right? Because maybe you're more interested in DeFi, maybe more interested in the investment side within that, right? Maybe you're really interested in coding, right? But you need to try it out first in order to fully understand. Because my career shifted a lot of times because I actually spent some time within the industry and saw it by heart how it worked, right? And that typically gives you a very different picture. But it's a very promising space, right? I think you'll learn a lot. There's a lot of smart people in the industry. And it's a very tight community. So it's really great to build your network over time. Everybody is very excited to collaborate. which I love about the space. It's very casual, right? You don't need to wear a suit every day. People come all sorts of different styles, which is nice, but people still work very hard in the industry if they're good projects and they're good companies. So I think it's, I definitely encourage everyone to look into the space and spend some time in it, do an internship, start a job, maybe start your own company, do some coding learnings and techniques. I love it a lot. I spend a majority of my time doing that every single day, and I wouldn't want to have it any different.
Indeed. So with that, Tobias, we thank you very much for that very insightful talk, and I had a great time interacting with you. Thank you for being on the show.
Absolutely, my absolute pleasure. Thanks for having me.